and welcome to this special show where we talk about the markets and budget. And who better than the star portfolio manager to discuss all about the budget and the market, Mr. Porinju Veliyath. Thank you so much for taking out the time and speaking to Money Control. I'm going to start off by asking you about the budget, right? Because it just comes just a year ahead of elections and a lot of fears around the globe of recession. What do you think will delight or disappoint the market?
Yeah, thank you, Nickey and Money Control for inviting me for this. Of course, budget, is very different today than it was 10, 15, 20 years ago. The relevance of budget and that budget-related activity in the stock market has really come down. The relevance has come down. As you know, it's most of the things, most of the policy making happens outside the budget, especially in the last 5-6 years. And of course, this is the last full budget before the elections. So expectations and people are looking for surprises, positive or negative. But I believe there won't be any significant surprises in this budget. There won't be any untoward negative provisions too. As far as investing community is concerned, I strongly believe. Already we have, the taxation in place on the capital gains. But I think Finance Minister has indicated a couple of times in the recent past about some tweaking. So some expectation is that it could be, in time frame wise, for example, we have a 1-year time frame for the long-term capital gains. It can go to 2 or 3 years, which is reasonable. I think most other countries are practicing it that way. But I don't think it is going to be any big negative surprises, something like that happening. Or the 15% of short-term gains capital tax makes made 20%. So these are not very important. This capital tax will go happening, but staying invested and creating the capital gains is more important. Investors should be focusing on that than paying the tax afterwards.
We talk about their valuations. What do you think about it? Because I think old economy stocks are something that you've spoken enough and more. So do you think at this point of time, any few stocks that you'd want to talk about in terms of their valuations?
I think I had disclosed about a stock we are holding, our largest holding in my portfolio management, and AIF. We are in 2 schemes, and it's Raymond's. When everybody was ignoring Raymond because it was not an IPO, it's a very old company, old-fashioned. The perception on the management was not great in the market. So investors had a lot of apprehensions about such companies, not only about Raymond. So now see how they are performing. There are such valuable businesses, very relevant for the future kind of business models with hugely asset-based companies. So some of them are going to be 5 and 10 baggers from here in the next 2-3 years. That's what I'm looking for. So today, even a 13,000-14,000 crores market cap company is a small cap in India.
Right.
For me, it's a large cap company. So it's all depending on the investors' mindset and how they look at businesses and companies. Now we have a 5 lakh crores market cap and a large cap company. Maybe it is going to be struggling from that level of base to grow to a 10 lakh crores market cap. Whereas a 2,000 crores cute company out there, which may be, into a niche business, well managed, and, for them to become 5 times from 2,000 crores market cap to say 10,000 crores market cap, it may take the same time. Then the large cap from 5 lakh crores becoming 10 lakh crores. But investing in smaller companies, the risk element is much higher, that we all know. But I strongly feel those who directly invest in stocks should not miss this special opportunity in India to create wealth, significantly larger, rate of wealth than the large companies.